spontaneous video. I'm going to run over some technicals and so on, just as an update for our followers, YouTube subscribers and traders from across the world. So as you know, the UK has voted to leave the European Union and so forth, and everybody seems to have a degree in politics these days. Now, as with everything out here, there's always a two-sided scenario, more or less a distraction, where you've got some people over here like leave, some people over here like stay, and you've all got the reasons and so forth. However, a lot of these people are kind of uneducated in terms of market trends, currencies, strengths and weaknesses of a certain currency, and overall cycles in general. So the focus of this video is to just discard all of the nonsense, because the nonsense is going to go on either way, alright, and just get to some of the charts really. And my focus for this video is just to give people an insight as to where I think maybe the pound is headed, where the euro is headed, alright, and maybe some other pointers as well that could come in handy for the future. So what you see here in front of us now is the GBP USD monthly chart, and this what I'm going to go over is a form of technical analysis. Now, in the markets, there's technical analysis and fundamental analysis. Fundamental analysis, we're looking at GDP figures, interest rates, manufacturing data, job reports, etc., to determine where a currency is likely to go in medium term, long term, and even short term as well. However, if you have the skill of reading a chart from top to bottom, with a specific method, okay, very simple as well, to be fair. It's all about how we put all of the data together. It takes a while, don't get me wrong, but we can actually read the currency charts in order to give us an insight as to where we think that particular currency is going to go, due to various confluences, factors, and so on. So here, GBP USD monthly. It's been a huge day. Before I get into this, let me just show you the price action of today. Now, over here, this red candlestick, this red bar, we're currently trading at 1.3659. Today's highs were actually 1.5, and I'm going to go into all of these levels in a moment as well, and just stress the importance of having great key levels on the charts, because they act as foundations and they can give us a great insight as to where a currency is going to reverse and where a currency may actually end up. So 1.5, and we spiked all the way down to 1.322425, so that's over 1700 pips. Alright, could this be predicted? Certainly could have, and I'm going to show you some of the reasons as to why I knew GBP USD was actually going to make lows. I didn't expect it to come around here. I was more or less saying 1.3500, 1.3400, but we exceeded that, and as you can see here, we've hit my level of weekly support. Again, I'll get into that in a moment. We haven't seen really too many of these moves in the market, and also a word of warning, all of this information on the video, it's not really trade advice or recommendations. I do give some recommendations out on some of the on my other YouTube videos, Technical Tuesdays and so forth, but you guys know you should always just take it as a pinch of salt and use your own market methods, analysis and strategies alongside that. So I'm just giving more or less my opinion, okay? So we haven't seen a move like this since more or less when the USD Swiss franc, the Swiss National Bank removed the peg from the Euro Swiss, and we actually seen a 1700 to 2500 pip move on January 2015, the 15th of January, sorry, 2015. In these events, we shouldn't really be in the market, to be honest, because even if you were short, let's say around here, often what can happen with the brokers as well is the spread can widen. I know on some brokers on the Swiss National Bank experience, that went over 100, 150 pips. So again, you need wide stop losses and relatively a decent size account. So we don't really trade fundamentals, we specialise in technical analysis, and you can view some of our previous predictions on currency pairs on the Technical Tuesday volumes. So anyway, let's get to the point. Now, GBP USD has fallen, it's made new lows. These lows in which GBP USD have made are 31-year lows, okay? 31 years. GBP USD hasn't been this low for 31 years. Now, my overall forecast on this pair, regardless, let me just break it down. First of all, the referendum and so on. We're coming into a 7 to 8 year cycle of a recession, okay? Where you can go back in time. The last one was 2008, 2009, and then this one we're looking at more or less in the next coming few months. October, November are going to be extremely important dates. So I personally believe there's always a need for something to happen out here. in which, whether it's like a false flag terrorist event, whether it's some kind of form of politics to get everybody distracted, even with the votes as well. You've not noticed how all you had to do was go to the station, sign a tick with a pencil. They actually give you a pencil. Whereas if you think about it, everything else that's of importance, okay, because the UK is a corporation on the whole, that's why your birth certificate, etc., that's your straw man, everything you have to sign is in black, block capitals, your driving license, your passport, it's all capital letters, because that's more or less not really you, that's your straw man. That could be another video, go research that. So it's quite funny how when it comes to something that people are screaming about, oh, this is the most important decision of your lives, we're using a pencil. Okay, so anyway, most important decision of your lives, everybody can take into their own consideration, their own reality, and you can create your own reality based upon your thoughts, actions, feelings, emotions, etc. You really need to study and turn the television off and study yourself and see how powerful you actually are and work towards living the life you basically deserve. However, a lot of people think they actually don't deserve it. Anyway, that's another topic as well. So first and foremost, we have all of this nonsense going on, and we just want to cut straight through the middle because no one's really coming out with detailed analysis and as to what's really going on the whole. So me personally, the votes, etc., it's coming at a time now in the summer where it's quite important for this new cycle to actually start, this new decline. Now, we always need, down the line, let's say GBP USD did fall to my projected target of 1.15, and everyone's complaining about, oh, the pound's so weak, etc. They'd be like, why? Oh, because we left the EU. There might be civil unrest and turmoil over in Europe. People on the streets, etc. There's already police, it's all just calamity, especially in America as well. And it's like, oh, this is all because of, we left, things changed. There's always an excuse, basically, is what I'm trying to say. So, it could be a coincidence, who knows? However, charts don't really lie. 80 to 90% of the time with a strong technical skill and viewpoint, you can actually see where the market's going to go. So here we're coming into, as you can see, August. And at the moment, we are looking at a decline further on GBP USD in the next few months. 1.15 to where we are now is quite a while, okay, quite a distance, sorry. However, if you look back in 2008, when GBP was in a deep recession, the price action and the momentum behind some of these bearish moves were quite phenomenal. Also, the amount of money that was in circulation around 2008 as well, not just in the UK, in the EU and the US, over in the United States, more or less the debt and the money in circulation has quadrupled as well. Okay, I'm going to put up some debt clocks in a moment for you guys to think about and have a look at. So this is my long-term projection on GBP USD 1.1500, and this event that's actually happened just could be the catalyst for the GBP to decline, and maybe even the euro as well. So if I just go to GBP USD, daily chart. Now the importance of key levels over here, all of our students, all of our analysis is conducted in a simple method, in a simplistic format, sorry. However, the structure behind it, structure behind everything we do, we always go from top high frames down to the bottom high frames, well, top time frames, sorry, down to the lower time frames, more or less like 4 hour, 2 hour. But we're using our key levels on the monthly, weekly, daily, because they're like medium to long term projections. Now anyway, getting straight to it, over here we have June the 22nd highs, yeah, we've seen a decline on the GBP USD since then. We had some lows, 29th of February 2016 at 1.3834. We've consolidated for a while, and as you can see, we're actually reacting to these key levels, these boundaries. Now, how could we have maybe looked at GBP USD to predict where potentially it's going to lead? I wasn't expecting this in one day. I was more so expecting 1.3500, 1.3300, maybe towards the end of the year. However, I'm quite surprised. So this could be the start of something relatively big. So all in all, let's take the swing high point down to the swing low with a Fibonacci tool. And I did this, I actually posted it on Instagram, I can pull that up afterwards, but let's bring it down to 1.3834. So 1.3834. So what we can see here is we have the fib all the way down to the lows. We have a retracement, more or less, which last night we actually spiked through the 50% Fibonacci retracement, and we also spiked more or less to the T 1.5. So again, key levels don't lie, votes maybe do. Anyway, our Fibonacci extension target here of -27, which I use time and time again on all currency timeframes and currency charts, gives us 1.3268, but it also coincides with a strong area of weekly support at 1.3251. As you can see today, boom, we've smashed straight through that, more or less with high accuracy right there. If you guys can't see that, I'm going to try and highlight it. Here we go. As you can see, fib done, weekly support done. Normally when a fib is achieved, it's made its new low at the -27, 127% extension. We pull back. Okay, we're pulling back now. I'm not going to give any forecast going forward on this. I'm just going to, in terms of like a medium-term trade setup, I'm just going over the whole spectrum. So there we have a great fib. If we go over to our Instagram over here, I was going over this on Instagram as well with a little bit of a caption, and that was 2 weeks ago. Okay, so 1.3500 downside projection from the highs, okay, where it's potentially going to go, and as you can see on the daily time frame, you actually smashed straight through that. So that was a bit of a success within itself. Euro USD as well, fib don't lie, we've got the highs here, high to low, 61.8 retracement, same kind of price action, same scenario, we spiked up and we've come all the way down, hit weekly support and the -27 once again, 1.0990. Hey, I don't know, but all I know is Fibonacci is a great tool, sacred numbers, cycles, etc. So with the, let's just start on with the Euro USD. Euro USD overall, we've been trapped within this range. Just going to give you a bit of a catch up. We've tried to pierce and get out of this range past 1.1450 for quite some time, but struggling. Now we're getting some momentum to the downside, depending on the weekly candlestick close, which is going to be quite important. If we close all the way back down here, we could easily just melt straight through 1.0500 soon.
The £350 million a week we send to the EU, which we will no longer send to the EU, can you guarantee that's going to go to the NHS?
No, I can't, and I would never have made that claim. That was one of the mistakes I think the Leave campaign made.
Hang on a moment, that was one of your adverts.
Well, it wasn't one of my adverts, I can assure you.
Well, that was one of the Leave campaign's adverts. That money was going to go to the NHS.
And I think they made a mistake.
That's why many people have voted.
They made a mistake in doing that. But what I can tell you is we have a nice
You're saying
featherbed.
after 17 million people have voted for Leave,
Yeah.
based, I don't know how many people voted on the basis of that advert, but that was a huge part of the propaganda. You're now saying that's a mistake.
We have a £10 billion a year, a £34 million a day featherbed that is going to be free money that we can spend on the NHS, on schools, or whatever it is.
But you're not guaranteeing that that money, as promised, will go to the NHS.
You must understand, I was ostracised by the official Leave campaign and as I've always done, did my own thing.
Do you think there are other things that people will wake up this morning and find out aren't going to happen as a result of it?
Well then, that was a clip, a little snippet from this morning's news. It's basically a news station over here in the UK, and as you can see, one of the leaders, or whatever he is, one of the politic guys, is already going back on his word. Now this is what generally happens. They will just give you a load of garbage, these people, and once they get their own way, they kind of go back on the word. Now what really gets me though is that too many people put the faith in external circumstances and external parties in order for the change that they want to see. Change in the world is only going to come from you changing yourself, and I see so many mindless people talking about things they're not even aware of. They don't have a clue what they're speaking about, and they're like, oh yes, you know, we've got our country back. The UK is a corporation, for one. It's not your country. I don't identify myself with a country or a label or a football team and all of that kind of nonsense. It's all a distraction. What I'm a big believer of though is actually learning about yourself, changing your thoughts, changing your energetic blueprint, your emotions and so on, thinking differently to 90% of the people out here, and actually taking responsibility to actually step up and change your own reality. If you don't like it, which not a lot of people actually like their current situation, and they're quick to turn the television on and start to blame someone else. Fair enough, they are acting as a big distraction, but the way I see it, with all of the distractions in the world, it is a catalyst to actually spark a thought. Okay, we're supposed to be the intelligent species on the planet. However, we're falling for these tricks time and time again. It gets quite boring after a while, observing the human race just being led on by a couple of these shepherd dudes. So anyway, NHS, going into that, yeah, that is important. Healthcare is important, but you know what is really important? Learning how to eat properly. You do know the majority of these politicians out here are heavily invested in genetically modified food corporations such as Monsanto, all right, who are more or less poisoning the people. out here, and they're also heavily invested in factory farming and the dairy industry as well. So to be honest, it's in one hand in one pocket, one hand taking your viewpoints and also taking stuff out of your pocket as well. So we really need to just do our research on who these people are and so on, because it's like a vicious cycle. So anyway, enough of all of that. Back to the chart. So I've gone over GBP USD, gone over the euro as well. Potential for the euro to crash straight through 1.05 depending on the weekly close. But what I want to go over is the debt clock, because I did mention from here 2008, when we had this extreme decline, the UK debt and the global debt and money in circulation has tripled, quadrupled, mainly because of, after that last crash, we needed to prop up the economy, prop up the banks and so on. And what basically happens is central banks print money and they give it out in a digital format to the banks, and then they can lend it out as credit. So the credit boom has actually gone crazy since then, because again, a lot of people are actually in debt now due to like university fees and so on. In terms of the demographics, UK peaked between 2011 and 2013, and it's now up to the new generation to start spending again like our older generation did, to hold things together. However, our purchasing power of the money has in fact decreased big time. There's so much more money in circulation now, and the debt is way bigger than back then. So we're going to have a really tough time actually sustaining the way we live. So I'm going to take you over to the UK debt clock. So this is debtclock.org. And current UK public sector net debt is 1,638,890,800,000. As you can see, it's just rolling along. So that's equivalent to 25k per person. Total debt for every single man, woman and child in the UK, if you divide it by everybody. 61k per household, so imagine your family's credit card bill being that high. And in the future, if we carry on like this, our children and grandchildren have to pay off our debts, 121,182. So the system as it goes, and you know, the cost of living is extremely high. For one, that's due to the inflation and the purchasing power of our money declining big time. If we continue like this, then all that's going to really happen is we're going to pass it on to our next generation, and this is how the banks more or less have a grip on us. Okay, so again, this is something that we should be having debates on this on the news and so on, stuff that really matters, but again, no one is really aware of it. Lack of awareness in certain things, this is how they've got us by the neck. Next one, European debt clock, 12,774,000,000,000, 112 million debt. So Euro is in a little bit of a sticky situation as well. And if we go over to the US debt clock, US is kind of bad. 19,287,000,000,000 and so forth. And all these figures are just crazy. It's really hurting my eyes. So no one's really better off, to be honest. Everyone wants to complain about immigration and so on, people taking jobs. Number one, I've noticed, because I've had quite a few jobs in my time, especially when I was younger, more or less labouring jobs before I got into the foreign exchange market and my engineering, is that people who come over from overseas see the opportunity over here and work 10 times harder than any of the lazy people. One thing that we do lack greatly is gratitude. That's a real big one. And anybody complaining, the government saying, oh, you know, we're letting these people in, the borders, etc. Mate, you've gone and bombed them. So look at this. This is Syria, 2016. So how can you go bomb a country for oil, send troops over there for oil, and the reason they're getting away with this is because everybody's asleep. They're keeping everybody asleep. Once you start to wake up and realise, okay, through certain methods, switch up your diet, and you can see, and you'll be able to see clearly. This is what's going on. Problem, reaction, solution. So again, people arguing the toss out of here, saying, oh, we don't want people come in and steal our jobs. Mate, you are lazy. As I said, create your own reality, regardless of the external circumstance. So it's all a big joke, to be honest. But I thought I would just share a few figures with you guys. Go over some charts. Last but not least, I'm going to go over the dollar index, okay, which is this chart right here. Dollar index, for those who don't really know about this in particular, and who are new to charting, the dollar index is a index or measure of the value of the United States dollar relative to a basket of foreign currencies. So it's basically the US dollar against euro, the yen, sterling, the CAD, Swedish krona and Swiss franc. So the general gist of the US dollar index is that when all of the other counterparts weaken, the dollar index will actually strengthen. Now I've marked out a few things here. August 2008, GBP USD crash. We had a huge uproar in the dollar index as well, and then July 2014 we've been on a nice uptrend since then as well. We broke through the resistance, which is the red line, and as you can see, we're sat firmly on it. This candlestick here is actually a bullish reversal formation to the upside. So as the economy deflates ahead, the dollar will become more valuable, just as it did in the late 2008 when it spiked and everything else, including most other currencies, went down. And I believe this can go into 2018, 2019. There has been huge talks though. I've got another video coming out in a few days on cryptocurrencies, which is going to be a few parts, maybe 3 or 4 parts, going through cryptocurrency network, Bitcoin, digital currencies, and so on. There is talks out there that all of these nations are in so much debt, yeah, because of the printing and the credit. Credit is actually unlawful. Credit is unlawful. You can't create money out of thin air, and they're doing this basically because money isn't backed by anything anymore, and people don't even understand. People think money comes from the government. Like, it just goes beyond me. Anyway, yeah, so this could potentially come up maybe another 15-20%, whilst GBP USD, Euro USD tumble. So I'm just looking at correlations as well. So overall, wait for my cryptocurrency video to come out. It's great to actually know what's potentially around the corner. Many people are talking about a global reset. A global reset of all this debt, perhaps from fiat money, fiat paper money, up to a digital currency. Who knows? But I'm going to keep on track of it and keep coming with some good information for you guys. So I hope you enjoyed this video. Hope it gave you a little bit of an insight as to what's really going on out here. As I say, turn your television off. This could potentially be a factor for the GBP USD to fall. And when it does fall out the sky and lose another 20, maybe even 30% of its value, people can look back and then blame this decision or blame an outside circumstance for this. But again, these are natural cycles that must occur, and the fundamentals often give it a kick in that direction. So thank you. Make sure to subscribe to our YouTube channel, check out our website, follow us on Instagram, and stay tuned for more information.